Now, live from KUSI, this is Good Business San Diego. Sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking about the topics that are important to you, your home, your family, your health, and your money. And the following portion of Good Business San Diego is sponsored by Wilsey Asset Management. Brent Wilsey's back with us again today, talking about the cost of AI. Now, billions have been spent developing it, so will revenue from AI cover all the debt and expenses? What do you say?
That's $1 million question. And
it's a $1 billion question.
Yeah, well, okay, I guess $billion.
Trillion maybe.
Yeah, right, now that you use billions. But when you kind of break down the numbers, that's what I do, because I know people have made a lot of money investing off of AI. But the thing is a bubble. I'm going to give people some numbers, let them decide if it's a bubble or not. But let's kind of do some comparisons here, because the amount spent on AI infrastructure, so forth, is now more spent than to build the entire U.S. highway interstate system that took 40 years to build. I know that was like many years ago, but inflation adjusted, still more spent on that. And you think about that, 40 years, and now we're doing this in a few years, that's a problem. And what we look at too is that the next 5 years, AI infrastructure spending is required to generate $2 trillion in revenue. Now, $2 trillion, a lot of money. Let's kind of break that down.
Okay.
$2 trillion, that is more than Amazon, Apple, Alphabet, Microsoft, Meta, and NVIDIA combined.
Just to get to that $2 trillion.
Just to get that $2 trillion. That's a lot
integrating
of revenue.
AI.
It's a very high peak to get.
Yeah.
And it's just a problem that we don't see how it's going to be covered from the consumer.
Right. Okay, so from a consumer perspective, right now we're getting AI largely for free. Well, you know, that's going to change. When and how much are we going to be paying for this technology?
And that's the big question as well, because I myself, you, a lot of people I talk to, I'm like, oh, I love AI.
Yeah.
But it's free. I don't pay for it.
Right.
Will they start charging for it? I think they will try to. Now, businesses that use AI for their employees, they've found that the breaking point is about $30 a month. Now, if that's the breaking point, that's a lot of people to get to that $2 trillion revenue number, to get to that number. And that's a big problem. And what's happening, the reason why the investment's so large and people are into it, and again, congratulations, you've made money, is that the AI executives are really hyping it up. And they talk about things that this will take about 10% or make about 10% of global GDP. Not US GDP, but global GDP. GDP is gross domestic product. Okay. So that's a big number. And they say the way they're going to do that is they're going to do it by replacing jobs. Okay, great. So you replace all these jobs. Who's going to have the money to pay for the AI if you don't have a job? It's not going to be that important to you. It's just something that you have to have that job before you can actually pay for the AI.
Clearly, it's not a perfect science.
It is not.
And there's so much that we don't know that's yet to come, right? So from an investor standpoint, the question would be, is there an AI bubble that we need to be afraid of in the future?
And that's what is happening. People say, oh, it's not a bubble because this is different. This is, you know, the new thing. And as I said, it's evolutionary. It's not revolutionary. And what we look at is that there's been things of overexcitement in investing before. I mean, you've had it on canals, electricity, railroads, and who can forget just 25 years ago, the internet bubble. And what happened in the internet bubble, as an example, they built millions and millions of miles of fiber optic cable to put in the ground. They spent a lot of money on that. They borrowed for that and everything else. Well, what happened was they said, these experts, like now, saying, oh, the internet's going to double every 100 days. Well, that didn't happen. It took about 4 times that amount, over a year for the internet to double. Still very fast, but not enough to keep up with the amount of cable they were laying. So many companies went bankrupt because they couldn't handle the expenses, the debt. Investors lost so much money from that. Now, what's funny is that now, over 10 years later, we are finally using that fiber optic cable because of streaming. But it is a problem where they overspend, they overinvest, and they overhype. And that's where the small investor gets burnt, because it feels so good, and these guys talking about how great things are. It's just something, and even MIT says 95% of organizations receive no return on their AI product investments.
I know you're always cautious about these hot stocks, tech stocks. Got to be really careful here, right, Brent?
Exactly. Got to be careful.
Thanks so much. Really appreciate it. Preceding portion of Good Business San Diego, sponsored by Wilsey Asset Management, and we will be right back.